This is Horizon's Middle East and Africa, our top stories this morning. Oil gains as traders weigh threats to traffic through both the Strait of Hormuz and the Red Sea. President Trump vowing to respond to Houthi threats of a blockade. Trump also adding fuel to trade tensions, threatening 100% tariffs to pressure generic drug makers to shift production to the U.S. And Lebanon's president meets with President Trump in the White House as Israeli troops withdraw from parts of the country under a U.S.-mediated ceasefire. It's just gone past 8 a.m. across the Emirates, 6 a.m. here in South Africa. I'm Jennifer Zabasaja in Johannesburg. So clearly, as you can see from our headlines there, geopolitics are still at the fore. But of course, investors are gearing up for what could be a pivotal day of earnings. We have some major companies reporting later today, Alphabet and Tesla, to start us off with some of the hyperscalers reporting. But let's just take a look at your market picture as we get started with the session in some parts of the world. U.S. equity futures marginally lower right now. S&P futures down just over 0.1%. Though what we did see on Tuesday was really a striking rebound, especially for tech throughout the session. We did see chip makers leading the rebound. Supporting some of the optimism, though, was news from NVIDIA on its latest chip designs. We also had some bullish news from TSMC and also Micron that are worth mentioning. Positivity also feeding into the Asia session. We'll have Winnie walk us through that in just a bit. But the real question is, do we see some of the confidence in the AI trade getting some support from these earnings later today? That will be the question. As I mentioned, Brent crude, of course, is still in focus. Right now, Brent crude up just over 1.3%, trading above $92 a barrel. It's highest levels since early June. Treasury yields lower right now, but what we did see, Treasury yields really are up across the curve, holding on to their losses from at a 2-month high, the 10-year yield at 4.63% there. We also have gold on the board. Really quick, precious metals are getting a bit of a bounce on this Wednesday. Gold up 1.3% just about. Also seeing silver having a bit of a stronger session this Wednesday. Let's though check in on how markets in Asia are faring. Winnie Xu is standing by in Hong Kong for us. Winnie, quite a few sizable moves that you're watching. Walk us through them.
Exactly, Jen. A pretty nice day for Asia as we see Asian stocks extending gains for a second day. Now taking that 2-day gains to the biggest in about a month. Chip makers, the rebound in that sector is still driving markets higher today, and we have South Korea's Kospi index leading gains today, again triggering another sidecar today because of those sharp gains. Foreign investors continue to buy into the market, as we've also heard from brokers that they are seeing that the unwinding of the leverage is coming closer to an end, with JP Morgan saying that about 75% of that has already been done. Now, flip the board, we also take a close look at the Japanese yen, because finally we are here for the first time crossing that 163 level against the dollar, first time since 1986, so at a 4-decade low. Now that is being driven by the stronger dollar and also the higher oil prices, but we are seeing Japanese yen right today just hovering around those levels, despite the warning from Finance Minister Katayama that the authorities will be taking bold steps if needed. So it seems like investors still brushing off those warnings, as they also say that intervention risk, while it is there, it seems like the likelihood is quite low given the cost is high, and also the moves in the yen has also been quite gradual. Back to you, Jen.
Wow, a lot of really interesting price action we're seeing there. Winnie Xu in Hong Kong, thanks so much. Winnie, we'll check back in with you in a bit. Now, oil has extended gains as President Trump downplays the prospects of immediate talks with Iran, with both sides exchanging strikes for an 11th straight night. Commercial traffic through the Strait of Hormuz has reached its lowest level in 3 weeks, while Iran-backed Houthi militants in Yemen advised ship owners not to call at Saudi Arabia's Red Sea ports.
We'll see what happens. So far, it hasn't happened, might happen. But we take care of things. If something like that happens, we take care of it. You know, we've done that with the Houthis before, and we haven't heard from them in a while.
Meanwhile, mediators are continuing efforts to restart negotiations, with Pakistan and Qatar proposing a return to both sides' pre-July 9th positions as a first step. Tehran, though, has dismissed U.S. claims it's seeking more talks.
Iran has been reaching out to the United States, both directly and indirectly, to engage in talks about settling the differences with regards to what's happening in that part of the world. Unfortunately, so far, even though we have reached agreements, they have not kept their commitments. And as the President stated earlier today, I guess, today Washington time, yesterday our time here now, the problem we're having right now is that they're not serious about talks.
Meantime, U.S. Defense Secretary Pete Hegseth has told lawmakers he estimates the war has cost $37.5 billion. Let's unpack the latest now with Rachel Ziemba, founder of Ziemba Insights. Rachel, we always love to have you on the show. Thanks so much for joining us. So we're hearing conflicting rhetoric from different sides. We're also seeing these crucial waterways being blocked off. What do you see as the greatest risk at this point in the conflict?
Thanks, Jen. Pleasure to be with you. I think the greatest risk is that we could be heading into another escalatory cycle. It's not out of the question to see an escalation to a ground war and further exchanges of fire. President Trump may not be seeing evidence that Houthis are throttling passage through the Bab el-Mandeb from Saudi Arabia, but good reporting suggests that there has been less loading in the last week or so, and the period of the ceasefire allowed a burst of oil and fertilizer and other products to go on the market, but that's just not enough to make up for the drawdowns we saw. So at this point, I think there's a lot of mistrust on both sides of the diplomatic discussion here. And so it's not clear there's any immediate off-ramps.
And your expectation then is we could see Brent pushing even higher than it is right now?
That's right, Jen. What we've been seeing, we've seen a move up from the prices in the 70s, which seemed a little overly optimistic. A mini glut was happening. I think we could test $100 a barrel. We could go above that. But what I'm really watching from a macroeconomic impact is oil products. Diesel prices barely came off their highs from a couple of weeks ago. Gasoline prices are reapproaching their highs. And if anything, what's going on in the Middle East, plus what's going on with Russian supplies, is reinforcing a circumstance where there are disruptions to crude oil, but there's even more disruptions and refinery capacity that's offline. And we fill our cars with those products, not with crude oil. And we're heading into key moments where, diesel is used across agriculture. Fertilizer is used across agriculture. This is something that will feed into food prices and broader inflation. That reprieve we saw in inflation earlier, just a month ago, maybe coming off quickly, unfortunately.
Well, Rachel, considering that, I mean, there really could be a domino effect if we do start to see fuel rationing or some of these products not being as readily available, not just in the U.S., but also in Asia and Europe. What is your timeline for your expectation for when some of these countries might really start to feel pressure?
Yeah. So the good news is that some of the policy restraint, the policy pullbacks that we saw a few months ago are still in place. We've seen airlines cut capacity and some more efficiencies there. That may not be great for the tourism industry, but we have seen some demand deferral. I really have my eye on China, right? China reduced its demand very extensively for oil products. But I do think if things continue as they are and the disruptions for both of these key choke points, I think we could, we could still be in for a summer of pain and a difficult fall. That, of course, may focus the attention of American negotiators and U.S. partners in Asia as well as in the Middle East. And I also think really what's going to happen as we get closer to Northern Hemisphere winter and people worry about how houses will be heated and natural gas dynamics, that's also going to be another pain point.
How do you see this affecting U.S. Gulf relations, Rachel? Because at the same time, we're seeing the U.S. Potentially striking a deal with Saudi Arabia on nuclear terms. What is the signal to you?
Yeah, I think we've seen U.S. relations with Gulf countries, if anything, with both the UAE and Saudi Arabia. We've seen a doubling down of these countries with the United States, concern about the U.S. commitment in some areas, but real recognition that these are the military and nuclear and AI partners that are available. Saudi Arabia has been looking for such a nuclear enrichment deal for nuclear power for quite some time. So I think it's a mixed story, but countries in the Gulf are really concerned about the long-term, I think, U.S. commitment in the region.
Yeah, we'll still watch how this continues to develop. Rachel Ziemba, thank you so much for joining us there. Rachel Ziemba of Ziemba Insights joining us from Vancouver. Still ahead, BNP Paribas tells us why they think the yen's weakness could extend further as markets digest the Japanese currency hitting a 40-year low. More details coming up next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. The yen has fallen past 163 per dollar for the first time since 1986, extending its decline and further testing Japanese authorities' resolve to intervene. Let's get more with BNP Paribas FXLM strategist for EM and Asia. That is Parisha Saimbi. Parisha, thanks so much for joining us. Let's just start with the yen, considering some of the moves that we're seeing, some of these levels not seen in decades, but you don't expect that there will be a clear catalyst to push the yen higher. Why is that?
Exactly. So we think that dollar yen will continue heading higher from here. I think, it's interesting that we've broken up above 163, which exactly as you say, has been a level that the markets have failed to break for a very long time. And this is despite the fact that we've seen these recent headlines about GPIF potentially increasing their investment in local assets. So we think that there are very few catalysts that are needed. Certainly when we look at BNP Paribas' global FX positioning tracker, it tells us that positioning in the yen is relatively light. We think that dollar carry will remain a theme over the summer. And we still think that the BOJ, while they're hiking, remain behind the curve. So we think the path is higher for dollar yen, and going up above 165 we think is plausible.
Wow. Do you think then we could see intervention risk, Parisha?
We certainly have to be mindful of it, but I think as we've seen over the recent episodes, whenever there is intervention, it can lead to a sharp drop in dollar yen, but it's often one that's quickly reversed. And we think that this will be another pattern that is likely to continue because the underlying fundamentals are supportive for a weaker yen.
What about broader Asian currencies then? What's your expectation for some of those that are potentially best positioned if we do continue to see the dollar on the path that it's on?
So broadly, we think that dollar-Asia pairs will stay supported and could, if anything, head higher from here. And there's a few factors behind that. I think one, as I mentioned before, we think dollar carry will remain a theme, and many currencies in Asia are considered low yielders, particularly currencies like the Singapore dollar, the Thai baht, the Taiwan dollar as well. And so we think those will broadly underperform this year. But then there are currencies like the Indian rupee, the Chinese renminbi, the Malaysian ringgit that we think will be the outperformers. And that's because these currencies we think will be better supported by portfolio flows. In the RBI's case, certainly this week we had an announcement that they've already seen $20 billion worth of inflows through those FCNR deposits. And we think that that will continue to rise. So that's increasing the RBI's ability to intervene and limiting the ability for dollar INR to trade higher. Similarly, we think corporate repatriation flows in China and also Malaysia will cap upside in those dollar pairs as well.
Parisha, why don't you think we're seeing as much volatility in the FX market, considering some of the risks that persist throughout the world, not just inflation, but then there's also geopolitics, of course?
So I think certainly on the geopolitical side, markets have priced in some degree of that risk. We have seen oil prices rise, but exactly as you say, markets are largely shrugging this off. We haven't seen a return back to the highs in oil prices. And I think part of that is because there's some expectation that dialogue will prevail, like we saw the first time, and that eventually this will subside. We also don't think there's a strong reason or narrative for either side to want to re-escalate tensions back to levels that we saw earlier this year. So while yes, oil prices are higher for the time being, we ultimately expect them to subside, and we see oil ending this year closer to $80 a barrel. But even if we look at other factors like the tariffs, we've seen recent headlines from the US about the tariffs on Canada. And again, we've seen some upward move in dollar CAD as a result. But I think unless we see a broad-based package that are affecting many countries, then there may just be some idiosyncratic moves. But again, something that may not even come to pass, exactly as we've seen in the past, where policies get implemented and then potentially get reversed.
Thanks so much. We have to leave it there with you, Parisha Saimbi, BNP Paribas, FXLM strategist for EM and Asia. Really appreciate your insights. Now, coming up, President Trump announces delayed tariffs on generic drug manufacturers as he turns his focus to affordability concerns ahead of the 2026 midterm elections. This is Bloomberg. Welcome back to Horizons Middle East and Africa. President Trump says generic drug makers have 2 years to move production to the U.S. or face a 100% tariff from August 2028. That levy could double a year later to 200% in August of 2029. Let's bring in Lisa Du, who leads our Asia consumer and health coverage. Lisa, just take us through more of what Trump announced and what exactly it all means.
Yes, like you said, Trump saying on Truth Social that generic drug manufacturers basically have 2 years to move their manufacturing to the U.S. or face a 100% tariff on drugs imported into the U.S. by August 2028, and that will double a year later. And this is part of a slew of tariffs he's expected to announce this week. And obviously, this will have a big impact on kind of the supply of low-cost drugs into the U.S. About 90% of prescription medication in the U.S. are for generic drugs. This also obviously plays into one of Trump's major talking points for the midterm elections this year, which is connected to the affordability crisis and the cost of drugs, as well as the reshoring of American manufacturing.
How widespread could this be, Lisa? This could hit consumers, but then also drug prices more broadly.
Yes, and also it could really impact generic drug manufacturers, especially those in India, which is the largest supplier of generic drugs to the U.S. About over a third of generic drugs sold in the U.S. come from India. And these generic drug makers obviously operate on very low margins and have very little wiggle room when it comes to absorbing a sudden new cost or kind of quickly relocating a factory. So they could be particularly vulnerable. And also industry executives in the pharmaceutical industry, executives have also warned that even though, Trump has said that this is meant to pull back on the cost of drugs, that this could actually have an impact on the price of drugs and make them more expensive just because these generic drug makers have so little wiggle room and might have to pass on the cost of these drugs to the U.S. consumer.
Wow. Plenty to watch for there. Lisa Du, who leads our Asia consumer and health coverage. Lisa, thanks so much for walking us through all of this. Now, for a look at some of the other stories we're following, President Trump has announced a reciprocal trade deal with Jordan. Under the agreement, Jordan will remove non-tariff trade barriers and expand access for U.S. goods, including agricultural products and vehicles. The countries also agreed to cooperate on investment security, export controls, and duty evasion. Meanwhile, Royal Jordanian Airlines also purchased 6 Boeing 787-9 aircrafts valued at $1.4 billion and signed long-term agreements for leasing other planes valued at $500 million. SpaceX shares closed more than 3% higher in New York, snapping 7 days of declines, and it comes as the company prepares to unlock as much as $116 billion worth of stock next month for the first time. Restrictions preventing some insiders from selling as many as 911 million shares will lift on August 6th, 2 days after the company reports quarterly earnings for the first time. And Indian opposition leader Rahul Gandhi has been forcibly removed by police during a protest outside Prime Minister Narendra Modi's official home. Gandhi was among more than 100 opposition lawmakers gathered at the site on Tuesday to condemn police action against student protesters, which has left dozens injured on both sides. And New York's mayor has conceded the city does not have the ability to arrest Benjamin Netanyahu. Zoran Mamdani had posted a video on his Instagram calling the Israeli prime minister a, quote, war criminal who belongs before a court of law. Earlier this week, President Trump made clear an arrest wouldn't happen as reports suggested Netanyahu might visit D.C. for the funeral of Senator Lindsey Graham. Supermicro computer shares surged in extended trading after the company issued its preliminary fourth quarter results. The server maker says its backlog of new orders hit a record in the quarter of more than $60 billion. It also sees second quarter gross margins in the range of 15 to 17%, which is nearly double its prior guidance. Now, let's just stick on markets and just take a look at where we're seeing some of the price action right now. As you can see, U.S. equity futures turning marginally lower right now. It's looking like in Europe, though, potentially it could be a stronger start to the session. Euro Stock 50 futures up just over 0.1%. But really, the story is focused on what we are seeing in the energy markets. Of course, we are waiting for earnings coming later today from some major companies, but the energy markets are in focus as we continue to watch developments in the Middle East. Brent crude up just over 1.3%, trading above $92 a barrel. And our Rachel Ziemba actually commenting earlier saying potentially we could see even more upside as this risk continues. We see WTI crude also up right now on the day. Now, coming up, talks between President Trump and his Lebanese counterpart take off. Direct flights could soon resume between the two countries after more than 40 years. This is Bloomberg. This is Horizons Middle East and Africa, our top stories this morning. Oil gains as traders weigh threats to traffic through both the Strait of Hormuz and the Red Sea. President Trump vowing to respond to Houthi threats of a blockade. Trump also adding fuel to trade tensions, threatening 100% tariffs to pressure generic drug makers to shift production to the U.S. And Lebanon's president meets with Trump in the White House as Israeli troops withdraw from parts of the country under a U.S.-mediated ceasefire. It's just gone past 8:30 a.m. across the Emirates, 6:30 here in South Africa. I'm Jennifer Zabasaja in Johannesburg. We will bring you that story on the meeting between Lebanon's president and President Trump, especially as it pertains to what is happening in the Middle East. Geopolitics still at the fore for markets, as well as earnings that are coming up later today for two notable hyperscalers, Alphabet and Tesla. Investors clearly watching what we see there and potentially some confidence that could be reinvigorated into the AI trade. Though if we take a look at U.S. equity futures, pointing lower right now, S&P futures down just over 0.1%. Though what we did see on Tuesday was a positive session for Wall Street with the major indices closing in the green. It seems like that optimism is still continuing into the Asia session, though. We'll We'll get some of that context from Winnie Xu in just a bit. TSMC and also Supermicro adding to some of the positivity that is being fueled into equity markets. Brent crude, though, in focus as well, as we see Brent topping $92 a barrel there, up just over 1.2%. The continued escalation in the Middle East, of course, concerns about what that could mean for inflation and then what sort of effects that we get from the central bank and the Federal Reserve. We are seeing Brent trading at its highest levels since early June. The U.S. 10-year yield is a bit flat right now, trading at about 4.63% there, though we did see yields up across the curve on Tuesday, holding their losses at a 2-month high. And just finally, we do also see precious metals with a bit of a bounce back despite higher oil prices. Gold is up just over 1.2%, on track to snap 2 consecutive weeks of losses. We'll see how that plays out throughout the Wednesday session. Let's check in, though, on how markets in Asia are faring. Winnie Xu is standing by in Hong Kong for us. Winnie, what are you watching?
Yeah, good morning, Jen. We are seeing Asian stocks extending gains for a second day as the chip makers continue to rebound. Now, it is, in fact, headed for its biggest 2-day jump in about a month. So lots of sentiment supported by the tech sector. Specifically, we are seeing South Korea's Kospi index here leading gains up nearly 5%. And another key focus that we are really looking at is the Japanese yen now finally crossing that 163 level against the dollar. It is at its weakest level in about 4 decades. Now, today, it's not moving as much despite the finance minister Katayama warning again of the authorities potentially taking bold measures. Now, the intervention risk is still there, but the likelihood at this point seems to be quite low given that cost is high and also the weakening trend has been quite gradual. However, flip the board, I really want to get your attention on just how volatile the South Korean market has been, because in fact today it triggered another sidecar, and it is in fact the 8th sidecar in a row for Korean market. And when you look at just this month, right, we had 15 trading days, and out of which 12 of those have seen a sidecar activated. Now, today, yes, we did see foreign investors stepping in to buy a little bit. However, many of the long-only funds who I've been speaking to are saying that they prefer to stay on the sidelines for now until these leverage bets are washed out further. And until then, they want to keep their trading sizes small as well as their safety for margins big enough. Back to you, Jen.
Wow. Interesting stuff there. Winnie Xu in Hong Kong. Winnie, thanks so much for walking us through some of the action we're seeing in Asia. Now let's get back to Washington. President Trump says U.S. airlines will be able to resume flying directly to Lebanon, lifting 4 decades of restrictions. It marks a major shift in relations after Trump met with his Lebanese counterpart in Washington. Let's bring in Bloomberg's UAE bureau chief. That's Dana Quresh, who's joining us now. Dana, so it's been almost 20 years since the leaders of these two countries held talks in D.C. What can we conclude from Joseph Aoun's visit?
Good morning. Yes, it's a very significant visit for President Aoun, especially that him and his government are trying and need that kind of political support from the international community, especially from the U.S., as it navigates the regional conflict and tries to reassert its control over Lebanese territories. And most importantly, it's almost as if they're facing off with Hezbollah now, of course, the Iran-backed group that has engaged in fighting with Israel. And of course, that led to the to Israelis occupying a significant part of South Lebanon. So Aoun needed the political support from President Trump, and through what we saw from the videos, it seems that he has gotten that. Most importantly, what he needs is also support for the Lebanese army to try to overpower Hezbollah. The Lebanese army is very ill-equipped and doesn't even pair with Hezbollah when it comes to when it comes to equipment, training, missiles, and especially money. So he did say in his remarks that without the Lebanese army, quote unquote, everything will collapse. And this is his warning shot here, President Aoun, saying that, meaning we need to give the army the right training, the right equipment, and the money to be able to face off with Hezbollah, or meaning to demilitarize the zones that you're asking us to demilitarize. Of course, part of this ceasefire agreement and deal between Israel and Lebanon, sponsored by the U.S. So what we're seeing here is that Aoun got the political support, but it is, I think, early to see whether he got the financial support needed for the Lebanese army to be able to face off Hezbollah or even demilitarize the area after Israel withdraws.
Well, meanwhile, as you just mentioned there, we are seeing Israeli troops withdrawing from parts of southern Lebanon. Is that likely to help rein in Hezbollah, in your opinion?
This is a very initial step, and what is needed is not these zones that were withdrawn from yesterday. The only zone that was maybe key to this was Zawt al-Gharbiyi, which straddles this occupation zone in South Lebanon. What is the bigger step and the more important one is when Israel starts handing over pilot zones to the Lebanese army inside the occupation zone. First, that will be a test to Israel's willingness to withdraw, and second, it will be a test of the Lebanese army's capability to maintain this and keep Hezbollah out of the southern region. Now, what we saw yesterday is that the Israeli army withdrew from 3, though 2 of them were outside of that zone, and 1, as we said, was straddling the zone. And what is more important is for them, and the next step, but we don't know when that will happen, is when they withdraw from areas inside the occupation zone and hand it over to the Lebanese army.
Bloomberg's UAE Bureau Chief Dana Qureshi. Dana, we always appreciate your reporting. Thank you so much for joining us. Now let's stick on the story and get more with David Wood, Senior Lebanon Analyst at the International Crisis Group. David, Dana just walked us through some of the significant factors from the meeting yesterday. What stands out to you?
Well, first of all, I think that the major positive is that Joseph Aoun and Donald Trump, after meeting for the first time, clearly got along. And that's something that really matters, particularly with the politics of US President Donald Trump, who obviously prefers to build different leaders around the world. So I think that's not particularly surprising, given that President Aoun is a charismatic guy. He also is a strong commander in the past. He was the leader of Lebanon's army. So that's the profile of leader that US President Trump tends to like. And that means that what Joseph Aoun really wants to do is to maybe change slightly the way that Donald Trump sees the situation in Lebanon. I think up until now, the Trump administration has largely been concerned about the ongoing war in Lebanon due to its connection with Iran. And that is that Iran was insisting, as part of its talks with the US, that there also be a ceasefire in Lebanon. What Lebanon's president now is trying to emphasize to Donald Trump is that the US should be invested, and him personally, Donald Trump, in a ceasefire taking hold in Lebanon and eventually an Israeli troop withdrawal for the sake of Lebanon and Lebanon alone.
Trump has mentioned involving Syria. Do you expect that to be fully realized in this resolution?
So, Jennifer, I would have said that this was probably one of the more worrying aspects about the meeting and the outcomes from the press conference that we saw, and that is that President Trump again returned to this idea that he's been promoting recently in relation to Lebanon, which is that Syria's new leaders under Ahmed al-Sharaa could potentially intervene directly and help to confront Hezbollah. Now, while even Syria itself and Ahmed al-Sharaa personally have stressed that they do not plan to do this and that any support they provide for Lebanon would not come through like military means, it is still worrying that perhaps part of the US theory of change, or this administration's, in terms of what's going on in Lebanon, is to give a higher role to Syria. The thing is that inside Lebanon, this would be rejected by virtually every political group here, not just Hezbollah, obviously, which has clashed with Ahmed al-Sharaa and his organization during the Syrian civil war, but also many other sectarian communities in Lebanon, which have traumatic memories of Syrian from the 1970s right up until 2005, when Syria finally withdrew from Lebanon. So that proposal is really worrying. I think the other worrying aspect, just briefly, is that while Donald Trump gave the right political signals and was saying that he supports Lebanon in this process and that the US will continue to support the Lebanese army, Hezbollah remains opposed to this pilot zone scheme. So even if, as Dana says, what really needs to happen next is an expansion of these pilot zones and Israeli withdrawals from communities that they're actually occupying, the advantage of this would be that if the US can provide that practical support on the ground and apply leverage to the Israeli government to comply with the pilot zone scheme, it will make it harder for Hezbollah to reject the arrangement, especially if Hezbollah's supporters see that they have a chance not just of returning to their communities, but also beginning with post-war reconstruction. That kind of scheme becomes much harder for Hezbollah to disrupt.
What is the timetable then, David? Because Dana was also mentioning that the Lebanese army is still ill-equipped to go up against Hezbollah on its own. What do you expect sort of this plays out? What's the trajectory of this resolution moving forward?
So I think one thing that we need to be pretty clear about and clear-eyed in relation to is that the Lebanese army almost certainly will not violently confront Hezbollah. Now, at times, Israeli leaders have called for this, some US officials have called for it, and even some domestic opponents of Hezbollah have called for it. But the reality is that President Aoun, along with the leadership of the Lebanese army, have judged that even if the Lebanese army had much greater technical capacity and had much greater financial support, the reality is that it would be too risky for the Lebanese army to be deployed against Hezbollah because it could trigger a deadly internal confrontation. And also on top of that, it may well be that if some soldiers in the Lebanese army, particularly from the Shia community on which Hezbollah relies for its political support, these soldiers and officers might actually refuse that order to confront Hezbollah, which could lead them either to desert the army or perhaps even to defect to fight alongside Hezbollah. That could obviously result in the disintegration of the Lebanese army, which is crucial to internal stability in Lebanon. So for that reason, I don't think that we can expect a confrontation between the Lebanese army and Hezbollah anytime soon. However, the US does have a real opportunity by building up the army, but also throwing its political weight behind this diplomatic resolution to the conflict to ensure Israel's gradual withdrawal, to raise the political costs for Hezbollah so that if it does try to disrupt this pilot zone scheme down the track, it will need to be accountable to its own supporters who can see a real horizon for them to return to their homes, to end their period of lengthy displacement, and to finally start rebuilding their lives.
Really crucial insights and analysis from you there. David Wood, Lebanon senior analyst at International Crisis Group, joining us there in Beirut. David, thank you so much for joining. Now, coming up, Nigeria's central bank holds interest rates as the Iran war stokes inflation fears. We'll get analysis next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. Nigeria's central bank has held interest rates to curtail current price pressures resulting from the Iran war, which it described as the biggest risk to its outlook. Tuesday's decision keeps the benchmark rate at 26.5%, in line with forecasts. Let's get more with Bloomberg Economics Africa economist, that's Yvonne Mango, standing by here. So, Yvonne, is Nigeria exposed to disruption in the Middle East? How much are we hearing about that from the central bank?
So the inflation numbers that we've gotten since March show that the transmission has actually been quite limited. Most of the pickup of inflation has been due to domestic price pressures, in particular food and the hospitality sector. We think part of the reason we haven't seen transport costs surge as we've seen in South Africa, for instance, which is an oil-importing economy, is because, one, Nigeria is now consuming a lot of its getting a lot of its fuel from domestically from the Dangote refinery, so that takes away the high import costs and limits the exposure to global energy prices. And secondly, the currency has been relatively firm, and I think that's helped by the fact that they're an oil-exporting country. And
of course, you mentioned South Africa. This was Nigeria on Tuesday. What's the outlook then as we see more central banks making their own decisions?
So right now, we expect central banks to be cautious, as Nigeria was yesterday. As you're aware, we've seen an escalation of tensions in the Middle East. To provide context, in the case of Nigeria, prior to the conflict beginning, they were cutting interest rates. So our view is that they will hold up until they feel comfortable that inflation can start moderating, which we do expect by year-end, as food prices ease, and also given that we're expecting the shock to be transitory. For a country like South Africa, as you're probably aware, the consensus view is that they'll hike the policy rate this week. There is concern that there will be second-round effects emerging as a result of the increase in energy prices. But we do expect, as we go into 2027, inflation to begin to moderate and move towards a 3% target, allowing for rate cuts to resume.
Are there any outliers in the situation across the continent? We have seen some countries make decisions that we hadn't seen around the world, considering where we're at in the geopolitical crisis. What else stands out to you across the continent?
There have been a couple of countries, some in Southern Africa, that have cut. I think Zambia may be one of them, and part of the reason for that is because they've got restrictive policy. Interest rates, inflation, has been relatively low, and domestic price pressures were subdued, making them believe that that would be able to counter or mitigate the impact of higher transport costs. So we have seen such, but I think the majority of the continent has decided to be cautious. And as I mentioned, many are still waiting to see whether we'll see second-round effects, and then you're likely to see more rate hikes.
Yeah, we've heard that from Governor Kenyaho here in South Africa. Yvonne, we'll leave it there with you. Thanks as always. Yvonne Mango, our Africa economist for Bloomberg Economics, joining us here in South Africa. Now, for a look at some of the other stories we're following from across the region, Fitch Solutions BMI unit says that Senegal may seek to ease a liquidity crunch as talks with the IMF for a new program continue. The West African nation has been in talks with the IMF since a $1.8 billion lending facility was suspended in 2024 following the discovery of billions of dollars in hidden debt. Gabon is preparing to raise as much as $1.5 billion from external sources to finance its budget and buy back foreign bonds. This despite investor concerns regarding new foreign borrowing without concrete plans to rein in the budget shortfall. The IMF currently projects Gabon's budget deficit will rise to 10% of GDP this year from 8.5% in 2025. Novo Nordisk is planning to bring its oral weight loss medicine to South Africa, citing the region's challenges with cold chain distribution for injectable drugs. The drug maker is already engaged with local authorities to secure approval, stating that the country is one of its most important emerging markets. All right, coming up, how GE Aerospace is working to break supply chain bottlenecks amid soaring demand for its jet engines. We hear from CEO Larry Culp next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. General Electric says it is seeing improved deliveries for key suppliers to break bottlenecks amid strong demand for its jet engines. GE Aerospace Chief Executive Larry Culp was speaking to Guy Johnson at the Farnborough International Air Show.
What's good for Boeing or good for Airbus is good for General Electric. Okay. There's no two ways about that. But the other piece of the equation right now, Guy, that you didn't touch on, frankly, is demand. Every airline CEO that has been at Farnborough, those that we talked to just a few weeks ago at IATA in Rio, all have remarked about how strong demand has been, even in the face of some of the oil price disruptions since the springtime. So we're looking at a situation where we have very strong aftermarket demand, we have very strong new make demand, and again, we can never forget about defense. So we have our work cut out for us on a multi-year basis. We know we're going to have to ramp. We're going to make those investments, drive those process improvements. But that work is underway at GE Aerospace, and that work will continue.
One of the big discussions here has been almost about the aircraft that's not here, and that's the next generation of narrow body. We talked about it a little bit earlier on. You're going to test it on this 747, the engine for that. You're pushing quite hard for the open rotor technology. You think that's the future. You think it's going to be simpler, easier to maintain, have some fairly big cost efficiencies that come with it. The airframers aren't there yet. They don't appear ready, judging by the conversations that I've had, to be ready to make a decision on that. How late can they leave it? When do you think that decision is going to come?
Well, we had an announcement just yesterday in concert with Airbus, with CFM International, where we're talking about our new flying test bed equivalent for the open fan architecture. It's a technology development program, guys, as you well know. This is a multi-year effort. We do think the open fan architecture provides both efficiency and maintenance or cost of ownership benefits. So we think we will ultimately be able to deliver to the airlines, the ultimate customer, an opportunity to do both. It's not yet a product, so there's work to do here. There's plenty of time for us all to work that out. But every next generation narrowbody has always come forward with a step function improvement in performance. Very hard to justify the investment to develop one, let alone buy one, without that. We're confident that the open fan architecture is going to be the enabler in that regard.
And that was GE Aerospace Chief Executive Larry Culp speaking with Bloomberg's Guy Johnson, of course. Let's just take a look at markets right now as the Wednesday session gets underway. Right now, we are seeing U.S. equity futures pointing downwards right now in negative territory for S&P futures marginally lower, as well as NASDAQ 100 futures down 0.4%. But of course, as we've mentioned, all eyes are on major tech earnings coming later today from both Alphabet and Tesla. And then we also get quite a few on Wednesday. So perhaps equity markets waiting to get some reinvigoration or at least confidence for the AI trade back in to some of the trade. Eurostock 50 futures tilting upwards right now, up just about 0.1%. If we take a look at the energy sector as well, all eyes are on the developments in the Middle East. Brent crude, you can see there on the board, up just over $92 a barrel. We've seen Brent crude trading at its highest levels since early June, up about 1.3% there. That is it for Horizons Middle East and Africa. Stick with us for Daybreak Europe. This is Bloomberg.